the time when you should understand and try and analyze what should be the larger picture, the long-term perspective for the market. At all times, portfolio building exercise should be a primary motive, for which we have with us Sumit Bhatnagar, Fund Manager, LIC Mutual Fund, joining with us. Sumit, good afternoon. Thank you for giving your time to ET Now. It's a pleasure talking to you this afternoon. Mansi Dave this side. My first question, Sumit, to you is absolutely on the uncertainties and the behavior of Indian markets. Looking at all of these uncertainties, we have a lot of global factors which are playing around. Domestically, we have the earnings season, which was not that a great set, at least the first half. And now we have the inflation print, the wholesale price index, WPI prints coming in. All of this advocates one fact is that the markets are resilient. What's your take on the market at present?
See, like you mentioned, global economy is continuing to throw curveballs at us, and we think this curveballs would continue till the time Donald Trump is there in office. So what we need to focus on is domestic economy, and that is where our focus is. If you look at the domestic economy per se, we are doing reasonably well. The fiscal and monetary measures taken by RBI and the central government both should help in improvement in your growth trajectory in the second half. We expect all the liquidity measures, the rate cut measures that government has taken to play through your economy in next 2 to 3 months, and we should see some bit of an improvement. Some bit of an improvement both at GDP growth level and at corporate earnings level in the second half. Uh, uh, Regarding this quarter's numbers, see what this quarter's numbers, while maybe in broadly in line with expectation, the key takeaway for us is that the earning downgrade cycle or the pace of earnings downgrade is getting slower. And probably we are in a bottom quarter, or maybe the Q2 can be the bottom quarter for earning downgrade per se. And from here on, we expect the earnings to pick up gradually. And insofar as valuations are concerned, our markets are still fairly valued, whether it is your headline indices, or if you compare it on a the yield gap basis, or if you compare to the premium that we have enjoyed vis-a-vis other emerging markets, which are broadly in line with the long-term averages. So you are in a situation where valuations are reasonable and earnings trajectory is set to improve.
Hi, Ankur, this side. You mentioned about earnings. So, should we expect that second half of the current financial year will be better than the first half? And more importantly, time-wise, when will be the time of breakout? Because we are in consolidation range for very long. And one question which everybody is asking, which way we'll go? And more importantly, will this consolidation phase end soon?
See, insofar as the consolidation case is concerned, or when will the markets break out, probably we are not the right people. What we believe is that investors should look at a longer term investment horizon and should continue to participate in the markets as Indian story remains robust. So, yes, we do expect some bit of a time correction also in the market, but we don't expect major price corrections from here in the markets per se. And definitely, we do expect some pickup in corporate earnings led by your consumption space, as also the capex pickup in the capex activity, which should lead to some bit of a earnings pickup led by sectors like your NBFC, cement, uh, FMCG, that space per se.
Yeah, I agree to that, Sumit. And while we talk about the consumption theme, I would like to take it a little more ahead from there. And
So,
now, up next from here, another 5 6 months, at least till December or the start of January, will be the festival days, at least for the
right,
Indian markets. We'll start with
right,
the 15th of August, and then we'll have all the festivals coming till the new year.
hmm,
Considering all of these, there will be consumption theme, consumption demand, which will pick up. Let's say the
hmm,
FMCG, automobile, travel,
right.
tourism, hotel. What's your take on that, and how do you see the consumption story for the second half?
See, I would stretch it a little. I would say consumption looks good from at least next 2 3 years perspective. One is that in near term, the impact of RBI restrictions on lending have started to ease. You should see some bit of a pickup in credit growth or a retail lending per se, which should support your consumption. Secondly, your income tax cuts should start flowing into the hands of people and getting a significant chunk. That also should support your consumption, as also the fall in interest rates and the liquidity available uh, in the economy per se, which should lower the borrowing costs across and should push the consumer to spend a little more. Uh, and if you push it beyond, then your state pay commission and central pay commissions are due next year. So from 1st January 2006, effective money flow may happen maybe in CY 27, but that also should support your consumption significantly. If you look at the government stand also, so essentially what was happening was that government was purely focused on capex and had actually taxed the consumption a little bit more, so in the form of higher taxes on the individuals or the tax tweaking of tax rates on GST, which took out close to 3 to 4 lakh crores from consumers' hands over last 2 years. This we expect to ease going forward. So we do expect some bit of easing on GST also going forward to support the consumption. That's why all in all, we do expect second half, the festival season, yes, to do well. But at an aggregate level also over next 2 3 years, consumption should see significant traction.
Consumption should gain significant traction. That is the view coming in from Sumit. Thank you so much for joining at this hour and sharing your perspective. And